Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at perhaps the other side of the coin on trading. Too many vendors will only ever show good trades or good days, so I think it's important that everyone knows that trading can be hard sometimes, and whatever you're doing, sometimes you can have a losing day. So this is what I wanted to focus on today. Here I'm looking at the new MTPredictor 7.5. I'll just focus on the automatic trade setups today. We have our STF color or STF indicator down here. The color indicates the large degree trend direction. So here the trend was calculated to be up, so therefore you'd only be taking buy setups. So you would have avoided this TS4 sell later in the day. The one trade on the ES, this is a 3-minute chart by the way, you would have taken would have been highlighted by this history triangle here. We can place the analysis on this by hovering over the blue buy bar, right mouse click to analyze setup, and here's our analysis placed on the chart. As you can see, if I zoom in a bit, you'd have been taken in there and then stopped out for a -1 hour loss. Remember, we use correct position sizing to vary our number of lots, contracts or shares to keep our initial risks small and under control. But the important point of this is when you do have losing trades, and let's face it, every single trader or trading approach or anyone in the markets will have losing trades. This is just part of the business of doing trading. The losses are kept small and under control. So on the ES, it would have been a losing day. You'd have had a -1 hour loss. If we go back to the day before, this is why we use correct position sizing, because here we would have actually had another buy setup here. STF was black, so you could have taken it. If I place the analysis on here, the profit here would have been twice the initial risk. And that's the important point within trading. So when your profits come through, they are large, but when your losses come through, and let's face it, you will have days where you do have losing trades like this here, you will have had the losses will be kept small. So on the ES, it would have been a -1 hour loss. If we look at the NQ, if we zoom in a bit, the only trade you'd have had would have been this DP sell here later in the day. And again, this would have come down here. It would have actually gone past the 100% initial risk level. So maybe if you're an advanced trader, you'd have brought your stop to break even. But if you hadn't, again, it would have been a -1 hour loss. On the YM, if we zoom in here again, let's have a look at we've got the session breaks on. So here's the 8th of July, so this is the day we're looking at here. This TS4 sell was against a blue STF, so you would have avoided this. The interesting thing here is we had two history triangles here. Does this mean two trades? Well, no, it doesn't, because sometimes you can get a double bottom, and if this happens, our calculations move across to the second double bottom and then re-look at the code as well. So in this case, even though there were two history triangles here, there would have only been one trade. How do we know this? Right mouse click over that bar, put an analyze setup on, and you can see there you'd just been taken in long, and then the market came down and would have been a double bottom, wouldn't have stopped you out, and would have then stopped you out a few bars later. Again, correct position sizing here, varies our number of lots, contracts or shares to keep our initial risk small and under control. So again, this would have been a losing trade, but as we've seen before, the loss would have been kept small at just -1 hour, or what we call one risk unit. Again, if we scroll back to the day before, we actually had a nice TS2 buy setup here on the day before. If I place the analysis on, here the profit would have actually been 2.9 hour, or almost 3 times the initial risk. Again, a good example of when the profits come through, they're large, but when the losses come through, they are kept small. So this is why I wanted to do the video today, to basically show you that using the automatic setups yesterday with MTPredictor on the USE minis, you would have actually had a losing day. And it's important to understand that days like this do unfold, they do happen. It's just part and parcel of being a professional trader. But the trick, or the key to successful trading, is when you do have losses, as we've shown here, the losses are kept small and under control, and this is why we use correct position sizing, and this is what correct position sizing allows us to achieve. So that's today's video, showing the harder side of trading and just the reality that some days you will just basically end up with a loss, but as long as you keep that loss small, it sets you up well for going into the next day. As a PS to this video, I'd just like to follow up on some other markets. So rather than looking at just the USE minis, I'd like to look at some Forex charts. The one in particular is on the British pound US dollar on a daily chart. I've been following this in our MTPredictor customer training webinars, particularly when I had placed a decision point back off this high here in May, and as we were talking about in our training webinars, the British pound went up and made a high basically here in June, mid-June, right at this decision point resistance. And I said that the most likely area of where the market was going to go to now was the DP of the prior low, which was here. And as we can see, this is exactly what's happened in the last couple of days. So the British pound has fallen sharply and come in and hit this DP support zone. So there's a big decision for the market to make it at the moment to see whether this DP level will hold and the market rally, or whether we'll go down below this. If we go lower, then the next support zone is the DP of this level here, which is just below around the 147 down to 146 area. But if we go below that, well then the pound should get significantly weaker against the dollar. So it's sort of crunch time for the British pound at the moment, because we're at DP support here. So we'll see how this support comes in, whether it holds or whether it doesn't. If it doesn't hold, we have another zone just below that, but that is going to be the area that really is going to be interesting. So let's see how this unfolds on the in the coming weeks.